Evan, good to see you. We know how bad things are economy-wise when you look around the world, but we've got a lot of data to back things up. What Australia has always really performed in is the trade balance, something that has been a bit of a bright light. Is that going to continue though?
Actually, apparently, according to what forecasts are, it probably will be. We get that out today at around about 11:30 Australian Eastern Standard Time, and it does look like we're still actually seeing a trade balance in the surplus side of around about 700 million is the expectation. Significantly lower than what we've been averaging per month, though, which was around about 1.5 to even as high as $1.8 billion. The reason for it, iron ore is still flowing to China. Even with all the spats that we're talking about at the moment on the political side, China is still taking our iron ore. They've also been still taking our coal. Prices also have remained relatively higher than expected, around about 85 US a tonne and around about 120 a tonne for iron ore and coal respectively. And then as you can see over my left shoulder, the Aussie dollar over the last period has been significantly lower, and that has also helped on the value side. The catch though is that you are seeing other parts of the trade balance under real pressure, and that's exports, things like education. We already know that's under real pressure. Tourism, we know that's under pressure. But even saying that, you are now starting to see a slowdown in demand for things that you normally wouldn't expect, which is copper. We know the pressure that's also going on in energy. Don't forget, we do export a lot of things like particularly natural gas into Asia, and that's slowed significantly as we've obviously had the oil crisis, and therefore demand for energy products is also on the down. So it will be okay, but it is clearly going in the wrong direction.
Okay, what about commercial properties? More people are working from home. That might continue for another couple of months, if not years, as people try and stagger their work days as to keep that social distancing between us. What could that mean when it comes to kind of structural changes in that industry?
Yeah, there's even suggestions it could be permanent, Laura, in terms of some people with regards to that size. What you're already seeing, and the reason it's quite a concern from a market perspective, is that a lot of the owners of particularly commercial real estate areas, those that actually hold, big high-end services firms, law firms, banks, et cetera, they're the ones that are suggesting they've changed their overall scenario quite quickly, is that they are mostly owned by industry super funds or big funds and property funds themselves, which you and I hold in our super. And that is what the concern is. We've already seen one of the biggest super funds in Australia in trying to get out of their property trusts and can't get out. It's an illiquid asset. And the reason it's also an issue is that part of the reason Australia has done quite well for the last several years is because property prices, not just in residential, but also in commercial, have been incredibly high. And they're therefore going to have to get reevaluated if all of a sudden you can't rent the office space out and you can't actually see a longer term tenant at a level of return you would normally expect. All of that is going to come to the fore. And that's why this is becoming quite a concern for a lot of investors, and particularly for super retail, is that you've now got a scenario where you could actually see that sort of 15-20% of their portfolio allocations, particularly industry super funds, having big write-downs in asset value, and therefore also having a scenario where they may actually be stuck with assets they can't actually flick out because they're incredibly illiquid. It's a big sort of circle about how much of a problem this could be, but we've clearly structurally changed our work habits. And that therefore means we're clearly going to structure the way that we actually go to work and use work, and that is a headwind for commercial property.
Even after the last couple of months, can you believe, Evan, that some people still want to work from home?
Yeah, I know. It's an interesting thing, but it goes further than that too. If you look at it, then that downstairs, that cafe that sits downstairs that services all those workers, they're also now under pressure. So this is what the concern is from also the government side, is that if you all of a sudden have this flow-on effect, that cafe, that restaurant, that local corner store that they will go to in Sydney CBD or Melbourne CBD or Brisbane, Adelaide, blah, 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 they're also now the ones that they're really worried about with this sort of change in habit that could actually become a permanent sort of movement as we move through that next stage post-COVID.
Okay, Evan, some mixed news there. As always, thanks so much. We'll speak to you soon.
Thanks, Laura.